So I'm just going to pass you straight over to Luke Johnson, who's the CEO of H2 Green. I've just had a bit of a chat with him myself, and I think you'll find this very interesting. So over to you, Luke.
Okay, well, thanks, Robert. All right, everybody. So what I thought I would give you today is a bit of a discussion over how to take your ideas from, a pencil sketch actually into something that becomes a business. It's something I've done twice now. It's daunting, but it's possible. And I'll give you a few tips, hopefully, on how to do that. And I think it will help tie with really particularly around the 3-minute pitch that you need to do at the end. In fact, at the end of this slide, I put my own neck on the line because I've got 3 slides that I prepared for a business concept that I've just finished raising, H2 Green. Although we have pivoted since that point, but we got the business sold on the back of essentially 3 slides. So it is possible to get across something very powerful in a very short period of time. And if you need any help trying to do that, this is what I seem to do for a living now. Okay, so what we're going to do is give you a bit of a background about me. So you'll see one of my themes is cartoons, and that's because I am a storyteller. I'm a serial entrepreneur. I have to build teams, invest time in making people believe in a vision. And from there, I need to go and raise money, either that be by equity, so this is capital investments, by grants, or preferably by revenue. So what I want to show you is how you might go about positioning the inventions or the concepts that you're coming up with so that you might have a chance of actually turning it into a business. And the reason why I think that's important is that it's much more likely that you're going to be able to impact the world in a positive way if the invention that you come up with is a sustainable business. So we've spoken to a few groups as mentors recently, and I just wanted to throw this one up here. This is a very good starting point for you during this early phase as you're starting to develop your ideas. It's a product called the Business Model Canvas. You can search for this online. There are thousands of versions of it, but it's a fantastic way for you to start to think about how to take an idea, which might be something as raw as just sort of a generalized concept to prevent flooding, and then start to invent or determine how you can create that into a business, and all of the different activities that need to be addressed along that journey. And during the next hours, you really need to address all of these, and it will begin to fall out which ones of those need to be carried forward in a pitch. But fundamentally, getting your value proposition down correctly, understanding exactly what your unique selling proposition, your USP is, and then understanding truly how you're going to ultimately turn that value proposition into value so that people will pay for it, and then you can continue to supply that value. And so I would recommend, as you're going through the phase, particularly at this stage that you are right now, this would be a very helpful format for you to be working in to try to prepare your pitch. So I'm going to talk to you a little bit at this stage about where you can get some of the money for developing your idea, because fundamentally you're going to need capital if you want to impact a change. Now, one thing I think everyone, all the mentors on here will caution you against is the assumption that just because it's a good thing to do and it's a noble venture, that money is going to fall from the sky and allow you to do it. And that's often a place that we see people start at when they're trying to do something for the community or something for the environment. And it's difficult. You can get money from grants and charities, but they're limited in the amounts that are available. And you're also subject to a shift in the political winds, and suddenly things can disappear. You only need to look back at some of the early subsidies for solar and wind and see what happened to that industry for those companies that were too reliant upon that in their business model. There is certainly a growing component in the world of philanthropy in environmental impacts. We're seeing a lot of actions that are going on, such as like the cleaning up of the greater rubbish pit in the middle of the Pacific, where we're seeing people who are doing it and supporting that, really either philanthropically, billionaires, or crowdsourcing. But again, I would just caution that if you think that that's going to be where your business grows from or where this idea gets funding from, they're going to be very limited in how much you're going to do that. And I'm going to always encourage you to think about how you're going to turn your idea into a business, because this is a way to make that solution self-sustaining and scalable. Now, we're asking you to focus very much on a particular regional area at the moment. And that's what we would call a beachhead market in your discussion as you start to try to flesh out and grow this concept. But that beachhead market doesn't have to be the only place that it's going to eventually grow to, but it's a place where some other people have already done work for you to identify that there's a genuine need in that location, and you can take it and grow from there. So you should be able to scale that business if the idea has got merit. So this isn't going to be too relevant right now to the journey that you're on in the next couple of hours, but I did want to give those that have never been involved in fundraising a little bit of a lexicon for what funding exists and how you can go about getting it. The first place that we can get funding at the concept stage is usually received from the people that we call the 3 Fs. That's the friends, families, and fools. I did that with my first business. I was the fool. I put a lot of my money in and lost it on my first business. So that's where you can get a limited amount of capital to grow from a concept into an early idea. Now, what you've got right now in the group that you've got here is the ability to get a concept up and running and get stress tested with all of the mentors around here to take it beyond this stage, so that hopefully at the end of this journey, you have the ability with that plan and a group of founders to go out and raise money either from an angel or an angel syndicate. So these are people who will invest modest amounts of money. You might raise 50 or 100,000 pounds, but that's enough to get you started to continue to progress an idea. And these founders oftentimes will receive quite a lot of mentorship from those angels as they move forward through this journey, and they'll help you understand how to grow the business beyond that. But it really, at this stage, it's not much more than a business plan. So I would argue that if you do very well in the hackathon, you could exit this week with a fairly robust start to getting that kind of investment. Moving forward, we talk about businesses that start generating revenue. They'll still be loss-making. So one of the businesses in the industry I'm working in is ITM Power. They just raised 135 million pounds just the other day. They're still loss-making. They lost 120 million last year. So what they are, though, is on a growth journey. And so people are willing to invest into that. They will typically be called venture capitalists. And once you move beyond sort of those first revenue stages and then start to grow, and which is where, for example, ITM Power is now in, you can start to receive sort of this venture capital plus, or exit into IPOs, or even receive corporate venture capital. And you could be looking then at raising that sort of that tens to hundreds of millions. And finally, the next stage is when the business is profitable, you'll be able to raise that money from what we call private equity. Now, in Europe, private equity is the dominant source of equity investment that you can receive. Europe has got a very mature history going way back centuries of buying and investing in profitable businesses. The venture capital side of things is very much an American invention, and they've dominated that space for a long time. So it's important to make sure you understand what everyone's looking at trying to do with each of these funds. They've all got different motivations and different things that they're looking for, and pitching to them at the right stage. So where we are today in this in the hackathon is very much at that angel syndicate level, where you could go out, raise some money with a business plan, and your purpose there is to try to decide how you're going to get to first revenues. Now, we often, and I fall prey to this too, hope that we can find people that will fund a huge amount of activity very early on when the company is very naive. And that kind of funding might exist, but like elves and unicorns, I've not seen one. So don't expect that you can necessarily jump that hurdle. So when you're looking at your business and you're trying to design this concept for the hackathon, make sure it's a tenable reach that you're trying to do. If you're going to tell us that from this business plan you need 100 million, it's not going to happen. So where are the journeys that you're going to go? along that. And then the one thing that does exist, the one mythical creature that does exist out there are the dragons. And these are the ones that late in the company stage will try to drop small amounts of money into the business and create positions for themselves. And that would be the one to be cautious of. But if you ever get into that phase, feel free to contact me afterwards, and I can try to help steer you away from them. So you're now in a position where you're bringing the team together. And it's been really cool to look at how diverse the group is. I mean, I was chatting with someone from the Philippines a few minutes ago, someone from Pakistan. This is all around the world. There's a great degree of experience, different experiences available, and also different perspectives on life. One thing I've learned very, very much throughout my career, and I've worked internationally, Australia, America, Angola, Germany, and the UK. I respect and believe in a diverse team will always create a better solution, but you have to work to use it. If we have all of the same people in the same room, the classic old gentlemen sitting in an office together, just constantly reaffirming their own confirmation bias. You've got to be very aware of that. The hackathon and this kind of a concept is really a great way to start a really robust founding team. I've seen lots of people talk about their skill sets being in marketing or back-end development or whatever it is. And I've also heard some people unfortunately say, but I don't have a skill set in this particular problem. I want to challenge you to say that that's absolutely fine. I always reference this story. I'm a scientist, a geologist by training, that when we look at the portraits of some of the great scientists, the Einsteins and the Newtons and everything else, we see these old gentlemen with gray hair. Well, Einstein came up with all of his inventions when he was his great innovations as a patent clerk in his 20s. By the time he had that gray hair and that reputation, he didn't really invent much more after that. Raw talent, raw idea, passion and actual ignorance, I would argue, is a valuable point for you to have at this stage. So go out there and just ideate and be very passionate about what you can deliver. The one thing is, I know this is a very much an environmentally focused hackathon, but you do need to hunt while you're out there. Don't tolerate the hippos and zebras. So, a point that can develop, and it's very easy, and Zoom's a horrible environment for this to happen. Maybe not the highest paid person, but the loudest person in the room. If they keep speaking and they're not listening enough, you need to shut that down and develop the team discussion so that you can really bring the best out of everyone else. And a key thing that you will fall short on if you're not careful is that it's very easy to make assumptions. And I know the time pressures are very short, but gather evidence behind everything that you're doing. There's lots of online sources that you can do to back up this. It doesn't have to be perfect because we do appreciate the time limit is very tight, but build up your evidence base and have that to justify the position, because you'll get challenged by the mentors when you do your pitch. And if there isn't any evidence behind what you're saying, it won't survive. So I'm going to give you an idea about how to pitch for business. And I'm going to then show you an example, 3 slides. So the key point that you need to be focused on very specifically here is what is the problem that you're trying to solve. And you want to try to make it in your storytelling very relevant to the people that you're talking to. You don't have to explain the ins and outs of all of the science, but you do need to link the problem that you're talking to into something tangible to the audience. And you can back that up with evidence, statistics. You can put them in that journey. And you can help them feel like they're part of the story. And when you solve a problem, or you suggest that we will solve the problem, there's a very specific question that I always ask myself, and that is, why do I care? If someone says, I've got this great idea, it's just the best thing in the world, I'm always going to ask you, why? Why me? Why does it impact me or you or anything? You need to link the solution to this to generating value, because if you can do that, someone will pay for it, and then it will be able to perpetuate. So, there are certain initiatives out there that will be funded by the government alone, but if you can get people to pay for it because it's a service that they are willing to support, then it's a much more robust business plan to take forward. And we need to hear from you what your USP is going to be. Now, USP can be a great variety of things. An investor often likes to see that there's some innovation that's patent protected that they can get behind that prevents other people from taking that away from you. Now, if you're developing things like apps, there really isn't any protection around that. And you're going to have an issue then of trying to challenge giant organizations. So what do you bring to the table? That might be the team. That might be an avenue that you're focusing on that's new, that the existing problems, the existing solutions didn't have to solve, when they were developed. That's that leanness of a raw start. But you need to sell that and tell us what that USP is going to be so that we understand that this is something that we want to get behind. If it's the same as everything else and there's a business out there already that's £1 billion in value, well, how are you going to possibly compete against that? So there are aspects in your solution that will be unique. Focus in on those and explain to us how that is going to change, and address that problem in ways that no one else can do. A big thing that people fail to do in a pitch is talk about competition. This is one of the things that is really easy to fall prey to because you think your innovation is so powerful, so original that no one else has ever done it. The reality is, if no one has ever done it, it means there's probably no market and it's probably an unsustainable business unless you've come up with some unbelievable invention. Now, if you have, here's the challenge. You're then going to have to create your own market. Most companies don't do well in that space. So there will be competition out there, and everyone looking at your business expects to see that competition. You need to do that research, even over this weekend. Find out what other people are doing in this space and try to show that, look, these guys are great, but they're not doing this, and we are focusing in on that. And then we can more clearly understand how your USP ties to that value proposition. And finally, don't forget, unfortunately, businesses need to do the mathematics. We need to see some kind of economics that justifies that this is a problem, first off, that needs solving, that you've done some robust analysis of how much it's going to cost to solve it, and you've given us some reasonable ranges over how that adoption might work so that we can see that you're going to start losing money for sure, but then eventually that's going to turn around. You won't get the whole market in a year. You won't get the whole market in 10 years, but you will grow that business over time. So be honest over it. And it's okay to say, look, we could make money if this happens, we could lose money if this happens. And that possible loss is what I'm going to design the next 6 months of activity to mitigate. So I'll give you an example. Okay, I'm not going to tell you guys to go and do something and then not show you that I can have a crack at it myself. So this is what I put together for the pitch for my company, H2 Green. When I started it off, I was looking at doing hydrogen for energy storage. So buying off-peak power, storing it and selling it on peak. That was the business. And it got the business actually sold. So off the back of basically the next 3 slides after this, I sold a business that I didn't even have a bank account for it. And the pitch was, look, I can do this. And this is a genuine opportunity. We've actually pivoted. So we're not selling energy storage, but we're creating green hydrogen and selling it to the heavy goods vehicles and taxis and buses. Now I say we're selling it. If you search for my business, you won't find it. We're incognito at the moment because we're buying up land all around the UK, and we don't want people to know exactly what we're looking at. But yeah, so let me show you anyway how I got the backing that allows me to go and do those land purchases. So I presented to these investors the problem, and the problem is that consumers pay twice. So what's happening today in the renewable world is that renewable energy is not what we call dispatchable. You can't tell the wind to blow, and you can't tell the sun to shine, and humans consume power throughout the day according to what they want to do. They wake up in the morning and put the kettle on. They go to work and stop using all the equipment at home. Then they come home and turn the oven on and start watching TV again. So the way that we consume power is very predictable, but the renewable systems don't respond to that. And so what happens in the UK is we're currently paying about £140 million per annum to the wind farmers to not generate electricity. So it's a curtailment payment that the consumer is paying at £72 per megawatt hour to shut in power when it could generate but is not needed. So that's basically power that is capable of being generated in these off-peak times. Now, to counter that, we need to have dispatchable power. And so the way we do it today is we use fast response gas turbines, burning fossil fuels to recover that. So we're actually paying for power not to be created, and then we're paying for it again to be created when we actually want it. And so this was a very simple story. I can tell you that you're losing money out of your own pocket to pay for this. And we could see that there was an obvious ability for us to be in the way of this space. And that, for example, this is exactly what all the battery companies are vying for at the moment. So we came up with a solution. We looked at a variety of different opportunities, and we did the mathematics for it. And we said, okay, we can determine how much value there is for storing a megawatt hour. We can then compare that to the efficiency of a variety of different ways of solving it. And in this case, we're looking at lithium, and we're looking at generating green hydrogen by electrolysis of water. Lithium storage or battery storage will return 85% of the energy that you put into it. Hydrogen, creating hydrogen from water and then recombining it has several losses that will never be prevented because it's simple chemistry, exothermic losses, and we lose 61% of the energy. But we can then work out what the effective price is that we could charge against that original £72 of curtailed energy. So we could come up with a way that we could say, by charging this storage as a service to the network, it's a net neutral cost to the grid. And instead of them paying for this £140 million a year in curtailment, pay me that £140 million a year, tell the guys to run it, and we can start generating that. And then we put it through into some economics. Now, this is a kind of economics called a rolling NPV. If you guys haven't done anything in terms of trying to understand, or you haven't had experience in building economics models, give me a chat. I can do it. I might be a geologist, but unfortunately I've learned maths over the last few years. Quite simple stuff. But you want to then come back and say to an investor, well, you know, what happens if I do this, this particular action? How is this going to pay back, and does it make sense? And this should be the starting point for you to determine the difference between choosing, in this case, between lithium and green hydrogen. Okay, and on the basis of those three slides there, we sold a business, and we sold a business on the back of a business plan. It's possible to be done, and if you can link it back to value, you can show people that we've done the analysis. This is a robust idea. It's eminently possible for you to take this, get it invested, and get these ideas that you're going to create this weekend into the real world. Thank you.
Thank you, Luke. That was very interesting. As somebody who's owned a number of companies around the world, that was fascinating. Guys, I'm sure you must have lots of questions taking into account the topic Luke's been talking about. Let's fire them up, shall we? Who wants to ask Luke a question? Come on, don't be shy.
Hi, Luke. When you were talking, can we just see the slides again? The one that you mentioned about value proposition and the USP. I always get confused as to how do you differentiate between the two?
This slide here.
There were one is value proposition, the other one is USP, right?
Yeah.
How do you differentiate between the two?
All right. So for me, a value proposition is what is it that you're offering someone? Okay. So I am going to solve a problem. We're going to solve that problem. It's going to add value. But what's the unique element of it? That's somewhat different in my mind. You've got to define that this is a problem that we have to solve. So in this case, let me go down to my business model. This was my value proposition, that I could solve this problem here, that we're spending money twice. Okay. And by doing that, we're going to reduce people's costs. And the solution for it by USP, okay, I'm not actually showing you all of this now, guys. I'm sorry, because I had to hide that particular piece of information. But we have a concept that allows us to bring up this the value in hydrogen. So we would show that, look, the unique component. This is obviously a valuable thing to be done, and others can get after it. And going back to my point about saying competitors, by showing them that, I'm saying, look, there's a heap of people in this space. Lots of people are looking for it. And then you've got to show, this is my unique component. This is why my solution is going to have a space in the future.
Right. Would you say, in terms of the flow of this pitch, would it make sense to do, here's the problem, here's the statistics to associate with the problem, here's what we're putting value proposition, here's the competition, and here's our unique selling point compared to the competition? Would that flow make sense?
Yes, yeah, it can. I think you got to be aware you got, I think, what is it, 5 minutes, Robert? Is that right?
Sorry, take as long as you like.
No, sorry, the pitch on the no, I'm a mentor. I get to take all the time I want. Yes.
Those 5 minutes.
Yeah,
5 minutes.
The other thing I would like to ask is that if you go back to the slide on your economics, right? I'm always very amazed and impressed by how people put on these economic slides, numbers, especially in hackathons in a short space of time. I have a maths background, I have a finance background, but I still haven't figured out how, something, a prototype or something, just an idea that we've got. How am I supposed to get to the numbers of the cost, the selling, the market, the profit? I still don't understand how to come up with those numbers.
Right. So that's a very valid point. I can tell you what happens is that this thing here is absolutely wrong. I proved it wrong, this particular curve, only a few months later, which is why we then pivoted. Okay. Everyone knows that the investment predictions are incorrect. Otherwise, this would have been we would have been building it already. So what you need to do is show that you're making some reasonable assumptions. You'll note in the bottom of my slides through here, I've put some bullet points to say, or some little, notes here to say where I'm getting my data from. I never addressed that during a pitch. I wouldn't have time. But if someone's got some ideas that they want to, challenge me on, well, I can say, well, actually, this is where I've got my evidence from. And then you own the uncertainty and say during the pitch, you're right. Look, I don't know these. We're at this stage, and going back to sort of, the stages of investment, at this early concept phase, you're basically saying there's a problem here. This is where you are right now. There's a problem. Someone's already come up with this problem for you to say that you need to solve one of them. And you're currently going through and saying, what is this blue sky idea that I could try to address? You want to exit this hackathon with the ability to raise capital right here. Okay. And that is simply going to be the promise of a business that would develop in, that we could mature, and a plan to say, well, look, here's like 50 things I don't know, and I'm going to figure out which ones matter the most and solve them first. And everyone knows you're going to do that, and that's totally okay. That's what angels are there for. In fact, that's why they've got that name. Angels are entrepreneurs that usually entrepreneurs that want to give back. And they'll give you huge amounts of mentoring time, and they'll sit there and let you make huge mistakes, and they'll let you learn from that, and they won't judge you for it.
On that economic slide that you have, if you don't mind, can we zoom in on what kind of references you gave? I'm not trying to get into the specifics of yours. I'm just trying to understand, in the context of this and any other projects I might do, what kind of references would make sense, and how that would relate to my economics.
So I want to always see that someone's showing me that these numbers have come from somewhere, and I think actually this slide I've removed the actual link, or I'm not sure. Yeah, the link's missing now. So they were hyperlinks before, and you could click and it would bring up the reference to it. But here I'm being quite specific to say, look, this is my assumption. I'm saying that 140 million was paid in 2019, and it was that amount of curtailment. So I can work out that the cost is £72 per megawatt hour. So I could explain to someone how I derived £72 per megawatt hour. on this slide. I've said my assumption, 60 pounds per megawatt hour for various sources. So likely to be the higher cost for fast response generators. Now, I'm only using 60 pounds. So what I'm saying is it's likely to be better than that. If I'm displacing, for example, the nukes, when the nukes charge money, they charge at 200 pounds per megawatt hour. So there's all kinds of different costs out there. And what I'm saying is I've done this, and yep, it's uncertain, but guess which side it's going to go if I'm wrong. It's going to be better. So just putting it in and making it clear, evidence is always important. And
back to your graph, the economics graph, what kind of references would you be giving here?
So this one I would have talked through a little bit more. So the reason why the lithium batteries are spiky is because there's a capital investment to basically replace, with lithium batteries, we have to replace the entire kit after about 8 years. It's not like you don't get to restore it. And so there's a big capital cost. I'm a geologist, and I can tell you right now that a lot of the materials that we get in batteries, I'm quite concerned about because they're not very healthy for the planet the way we recover them. I like green hydrogen because it's only got a platinum anode and only needs to replace it 20 years. And that replacement cost out here is not visible on an NPV graph because it's not relevant to the costs right now. So that's why this curve in the blue becomes much smoother for the hydrogen solution.
This is very useful, and thank you so much. Thank you for all your insights. It's been very useful, and sorry I asked a lot of questions.
That's what we're here for.
This looks a bit like, are you familiar with the concept of efficient frontier?
No.
Okay, basically efficient frontier is basically a graph used often in optimization problems where you're trying to do a trade-off between one thing and another. So you might be doing a trade-off in investment space in terms of return versus risk, or you might be doing a trade-off in any market, any marketplace, in fact, in terms of sales versus volume. In terms of, for example, maybe that's not a good example, maybe revenue versus volume in terms of if somebody's trying to go out into a market, are they going to try to do the goal of trying to build up volume versus, get a lot of profit from a small bunch of people, or get a lot of volume, but
do you want,
so that kind of trade-offs. And
do you want to be Coca-Cola, or do you want to be Apple?
Exactly.
Large volumes are low profit, or small volumes are very high profit. But that's something you can state, okay? And there's always an investor out there that wants to do one and not the other. So my background was oil and gas in geology, and net present value is basically the larger amount of money you can generate for me, the better. So the really big oil companies, that's what they want. The smaller ones want rate of return because they've got smaller amounts of capital. They need that capital to make a lot of money. But if they're a Shell or a BP, they have to have a huge revenue stream, and it doesn't have to be super profitable. So there's different reasons why different businesses will have different interests in economics. You can simply state, this is what I'm doing. And you have investor meetings where you say, I'm doing this, and investors will turn around and say, I don't like that. And you go, thanks, okay, bye. And that's just how it works. It's perfectly okay.
Yeah, again, this is awesome, Luke. I might want to connect with you later on to bounce off some more ideas by you.
Absolutely, I'll be online all night. So just give me a bell.
Sounds good. Thank you, Luke.
Does anybody else have any other questions for Luke at all? Silence? No? Luke, thank you very much. That was very, very informative, as I said. Just out of interest, if there was one lesson you could give any sort of would-be entrepreneur, anybody, one sort of vital tidbit, what would that one be?
Right, so my first business, I used to have a house and now I rent a flat. I put a lot of my money into it that I'd earned over my years. And that business digitized me as a professional. And what stung me was hubris. I created a set of software that digitized Luke Johnson's ability in geology. And so it's good. It does what I said it would do. But the problem is, I thought everyone wanted to be that, right? So the belief too much in inventing your own thing and having a genuine belief that that's going to be the right thing. This new business I've created, I don't know anything about hydrogen, or didn't know anything about hydrogen 6 months ago. I would say, as an entrepreneur, focus on finding a problem that you need solving, and then bring people around you that can solve it with you. Use the group, bring people together, and don't just try to believe that there's some genius invention. It's more about trying to find the business opportunity and the business model that will work, and a lot less to do with the invention. So do that. Focus in on come all the way back. This is where you should be starting. There. Do this. Do 10 of these. Okay, so and throw them away. Like, just put post-it notes on each bit here, then put it aside and do another one. You shouldn't do this once. You should do it many, many times, and then figure out, okay, this one works, and you'll make a business out of it. And it is surprisingly doable. And if you've done this in a robust way, others can follow the story and they can invest inside you, and support your business.
Fantastic, thank you, Luke. That's yeah, very interesting. Just quickly, guys, any questions before we all wrap up and let Luke go, and you can all crack on? No? Okay, well, Luke, as he said, will be available, so do pick his brains. That's what he's there for. Sarah will be back with you at 8 o'clock tonight on Zoom, so obviously see you all then. And obviously, if you need anything, the team are obviously on Slack there to help you in any way they can. Thanks, guys. Thank you very much, Luke.
No problem.
Have a great afternoon.
Thanks, Luke.
Cheers, guys. Bye.
Thanks, Luke.